Okay, let's just get right into it. Welcome to today's Explainer, where we're going to unpack a seriously high-stakes, real-time trading scenario. I absolutely love this kind of structured breakdown because, it takes the sheer chaos of a live chart and distills it down into pure, actionable logic. We aren't just staring at lines on a graph today, we're literally decoding the real-time psychology of buyers and sellers clashing in the market. We'll start by sizing up the macro trends, and then we're going to zoom way in for some highly specific candlestick pattern analysis. So get ready because the clock is ticking.
And boom, you are right in the hot seat. This is the ultimate question. Would you buy or would you sell? When you're staring down a live market, this is literally the only question that matters. And the reality of the analysis we're doing today, it doesn't give you hours to sit around and ponder your strategy. It strips away all that extra noise and forces a split-second decision based strictly on the visual evidence right in front of you. Imagine you're there, tracking the flow of capital, and you have to make a call that could make or break your portfolio. Are the bulls in charge, or are the bears taking over?
You've got exactly 5 seconds to decide. 5, 4, 3, 2, 1. All right, time's up. If you didn't have a solid answer just now, or let's be honest, if you were kind of just guessing, well, that's exactly why we're doing this explainer today. We're going to rewind the clock and analyze this situation together, piece by piece. So the next time you're faced with that tiny 5-second window, you know exactly what to look for.
Section 1. Analyzing the market context, the macro clues. Okay, before we can even think about doing our specific candlestick pattern analysis, which is the micro stuff, we absolutely have to understand the broader environment we're operating in. I mean, you wouldn't try to predict the weather by staring at one single cloud, right? You have to look at the whole sky. So let's look at how systematically the evidence stacks up here. First off, the price is decisively snapped below a well-established channel. This isn't just a tiny blip. An established channel means buyers and sellers had an unspoken agreement on a price range, and that agreement was just violently broken. Second, this break tells us explicitly that sellers have completely ripped control away from the buyers. The bulls have lost the wheel. Third, we're seeing a really noticeable shift in the trend, defined perfectly by these descending steps, lower highs and lower lows. That right there is the textbook definition of a shifting tide. And finally, the data shows the market is currently overextended and oversold.
So, what does this all boil down to? It's captured perfectly right here. Sellers are rapidly gaining momentum. All of those macro clues we just talked about, the broken channel, the defeated buyers, the lower highs and lows, they all converge into this one undeniable reality. The downward force isn't just steady, it is actually accelerating. The market is heavy, and the sellers are flat out stepping on the gas. Grasping this momentum is the foundation of our entire strategy. We now know for sure that the macro river is flowing hard to the downside.
Section 2. Spotting the candlestick patterns, the micro clues.
All right, now that we know the overall river is flowing downward, we need those precise micro-level signals to tell us exactly when to jump in. This is where our focus on specific candlestick pattern analysis truly shines. Look closely at these 3 consecutive, incredibly heavy bearish drops. In the trading world, this specific sequence is known as the 3 black crows. And guys, this isn't just some random grouping of candles, it's actually considered one of the most significant reversal patterns you can spot. Why? Because the physical anatomy here, 3 consecutive, long red bodies with very little wick, visually represent sellers just relentlessly pounding the price down period after period with absolutely zero meaningful pushback from the buyers. It's a definitive sign that a downtrend has fully taken hold.
But wait, the chart gives us one final, just beautiful piece of evidence. Look at this magnificent inverted hammer. Check out that super long upper shadow and the tiny little real body sitting at the very bottom. So what is that physical shape actually screaming at us? The anatomy of this specific pattern reveals the underlying psychology perfectly. It means buyers attempted this massive rally upward, which created that long wick, but they were completely crushed by the close. They were exhausted and totally unable to push the price even a fraction higher. They basically threw a massive punch, missed completely, and collapsed, resulting in that squashed little real body at the bottom.
Let's put these 2 realities side by side to really drive home the psychology at play here. Over on the left, based on our macro trend and those 3 black crows, we have sellers with all of the kinetic momentum just bursting aggressively to the downside. And on the right, derived directly from the physical shape of our inverted hammer, we see buyers who have literally hit a brick wall. It's like a massive tug-of-war, and one side has just completely dropped the rope. The sellers have all the energy, and the buyers are totally gassed.
Section 3. The final trading verdict.
Okay, so we've analyzed the macro environment. We've conducted a highly specific candlestick pattern analysis, identifying both the heavy downward bodies of the three black crows and that totally failed upward wick of the inverted hammer. Our 5 seconds are up. Based on this overwhelming confluence of evidence, what's the only logical action left to take? Boom, right there. I initiate a short position immediately. You don't sit there and second guess it. You definitely don't buy into a market where sellers have shattered the channel and formed three black crows while buyers have completely exhausted themselves. You sell. You short the market. And that word immediately is absolutely crucial here. Once your structured analysis is locked in and the visual evidence aligns, your execution has to be decisive.
And as the charts later proved, this decisive action resulted in a highly successful trade. By breaking down a chaotic market into clear, logical steps, from the broken macro channel all the way down to the specific micro candlestick anatomy, the trader was able to accurately predict the downward price action. So, the big takeaway from today's explainer? Trading isn't about guessing. It's about reading the visual language of market psychology. The clues are literally always there on the chart, just waiting for you to decode them. Which leaves us with one final question for you to ponder. Will you recognize the psychology in your next 5 seconds?